Okay, welcome to Sacred Account Saturday. It's good to see everyone today. We've got quite a few attendees coming on Zoom already. We've got some on Facebook as well. So if you're just tuning in for the first time, my name is Jerry Fetta. I'm the owner, founder, and CEO of a company called Wealth Dynamics. I have been a financial expert for the last 10, 12 years of my life. I've devoted that to learning about wealth, learning about finance, studying those that actually build the wealth and what they do. Not what they tell us to do, but what they actually do. And then learning that for myself, applying it and sharing it with as many people as possible. Okay. So that's my mission, my company, my brand, Wealth Dynamics. Our purpose is to help families, individuals, and entrepreneurs, people from all walks of life, become financially educated, okay, become literate, right? We want to know how money works, understand it. We want to help people become solvent, and then we want to help people achieve a greater level of financial freedom in their life. And then share that truth about money with others, just like I've done, right? So if you're watching this webinar right now, there's probably going to be, one of a few kind of people on this webinar. There's going to be people that are current clients. Okay, if you're a current client, shout out. I appreciate you. I love that you're on the content today, and I want to make sure that we answer your questions and we help you make progress with your finances. Okay, the second group that's going to be on here is people that are followers. They're not yet clients. Okay, maybe you saw some of my content on TikTok or YouTube or Instagram, or you heard me on a podcast, or maybe you read my book and you've not yet started working with us on these strategies yet. And so, my goal today is to give you enough information to make a decision on doing that, right? How do you go from, learning about the information to then putting it into practice and winning with it? Okay. And then the third group, you've probably not seen much of anything. Okay, you're brand new, you're maybe you saw one video or someone told you to come in, you don't really know why you're here, what you're trying to get out of it. So I want to give you, a very entry level understanding of how this system works. Okay, wealth has been built successfully since the beginning of time. Okay, if you go back and you study from the very beginning of time, the very first civilizations, there were always groups that had control of the money, the power, the resources, and there were groups that didn't. Okay, when something happens that consistently for that many thousands of years, why don't we look at it? Why don't we look at it? And why don't we say, what are they doing and how do we duplicate that in our own lives? Because it's not something that's inconsistent. It's every single civilization, generation, millennium, century that goes by, there are groups that have and there are groups that don't have. Okay, and the groups that have, financially speaking, they all kind of sort of do the same things. Right. And so it's about time that we started looking at that and confronting, that's the real problem here. Right. We have all these things, especially in today's day and age, that we're supposed to do to be, good human beings and successful in life and provide for our families and, have housing and food and shelter and all this stuff. And it all revolves around one thing. And that one thing is money. Okay. If we don't receive education on money, I would actually argue that you can't be successful in those other areas. Right? It takes money to do a lot of this stuff. And this is not the money rules everything speech. This is the reality of, if you want to go eat organic, you need to have money. If you want to get on a plane and you go visit your family, you need money. If you want to help someone out that's sick, you need money. If you want to commute to get to your work to be able to earn money, you need money. And so we need to confront that and actually embrace the fact that we live on an economic planet. We do need to know how money works. We do need to know how to earn it, how to save it, how to invest it. And that starts with things like today, financial literacy. Okay, so that's my intention and purpose today with anyone that's watching, current client, someone that's a follower, not yet a client, brand new, you're just learning. I want to help you win with money because it's something that you shouldn't not win with, because it's not hard and it's not complicated. Right. So before we dive in, a couple of ground rules that I want to cover that are things that, we go over every week, but they're so important. I never miss them. The first one is I want to make sure you have a purpose for being here. If you're watching this live, you're watching the replay, I appreciate you being on. And I want to make sure you've got a reason for being here. What are you trying to get out of this? Okay, this is not, free samples at Costco where you're like, oh, cool. I tried one. I'm going to move on, because you're not going to stay at the sample aisle for an hour. Okay, you're going to be on this webinar for an hour on a Saturday. Free samples at Costco, you take one, you move on, you're done. There was no time invested. You're investing time today. Okay, what are you expecting to get as a return on your time? You shouldn't leave this empty-handed. And if you're on here today and you're whimsical and you've got no expectation of return on time, I would say you should leave. You're wasting your time. Okay, one of the number one most successful actions that I learned and I practice in my life today is I focus on what am I getting in exchange for my time and my efforts. So when I go to a seminar or I go to an event or I watch a webinar, I don't watch it if I don't already know what I'm going to get out of it. And if I'm going to it and by happenstance I don't already know, then I figure that out very fast. Okay, so I want to give you a minute. Think about, what do you want to get out of this? Do I want to learn how to get out of debt? Okay, am I learning how to invest? Am I trying to learn how to reduce my taxes? Am I trying to learn how to become my own bank? Like, the learning that you want to do today should be centered around, where are you at with your finances? What is your problem? What is your goal? What's your obstacle right now? What's the purpose that you're trying to achieve? All of that's going to be centered around that. So think about, what am I dealing with my finances? Where could I use some help? And that's the thing I want to learn about. And then I would put that in the comments. So whatever you would like to hear me talk about today, I've got some stuff in mind, but if you have different ideas, I would love to see those. Put those in the chat and I'll make sure that we cover those. Okay, we've got one already from Chris, financial freedom / taking care of my parents. I love that. Okay, so just like Chris, put whatever you would like to have covered in the comments here. Okay, we'll make sure we cover that today. The second thing is you got to get rid of one preconceived notion that stops most people ever from learning about money, and that is the idea that money is complicated, finances are for the sophisticated. We need banks, we need Wall Streets, we need certified financial planners, we need CPAs just to understand any of this stuff. Okay, complete and utter falsehood. Right, and you can look at throughout history, like those that built the most wealth, they didn't do it as a Wall Street fat cat. John Rockefeller wasn't a Wall Street guy. Okay, you look at Andrew Carnegie, he wasn't a Wall Street guy. Henry Ford was not a Wall Street guy. Right, Wall Street wasn't actually even popularized until the 1930s. And it really became a big deal because people in the 20s were buying all these stocks. Most of them were fraudulent. They were pumping and dumping. That's why the 1929 stock market crash happened. The Securities Exchange Commission was formed in the early 1930s. A criminal was put in charge of it, by the way. And that was in the birth of, okay, we have now brokers and licenses and regulation. In the 1960s and 70s, the idea of a financial planner came about and a way to market Wall Street's products better. They were tired of being the stock salesman, the bond salesman, the slimy little scumbag that as soon as you find money, they show up at your doorstep. They didn't want that anymore. So they came up with, how do we make this more sophisticated? How do we market our message differently? And you can't blame them. They're a business. Okay. So one of the first things that they did is, through the legislation they put in place with the Securities Exchange Commission, they came up with a bunch of terminology, a bunch of very complicated sounding stuff. They named all of their different products and services after this complicated stuff, so that when you look at it, your eyes glaze over and you think, I could never learn this. I can't understand this. I need a professional. Let me go hire them. Okay, I could do that too. I could come up with an imaginary object right now on the spot and give it a complicated, fancy name to make you feel like you don't know what it is, and you don't know that I whipped it out my butt. That's what's happening on Wall Street. That's what's happening with banks. Right, the real stuff that's being used to build wealth, it's been around for centuries and it's been around for millenniums. There's not complicated, fancy language, and so one of those things is that money is complicated, finances are sophisticated, or the idea that it has to be. If it's not complicated, therefore it must not be a good thing. Right, the more simple, the better. We want simplicity here. We're not looking for complex. Right, because what happens is when you add complex, you add the first complexity. Well, now you need another one to solve for that. And now you have another layer of it. So you're going to have to add another one to solve for that. And you keep building this tower of complexity until it's unmanageable, which is exactly what Wall Street and the banks want. They want it to be unmanageable. Why? Because they're money managers. Right? So I'm not here to tell you Wall Street and the banks are the devil and they're bad and you shouldn't invest with them. You guys already know that. You know the movies. You know what's going on with Wells Fargo right now. You know about Wolf of Wall Street. You know about 2008. I don't need to waste my time reminding you of that. The goal here is freedom, greater financial freedom. Right? I believe that every individual on this planet should have financial literacy. They should have the ability to treat money like oxygen. Right? So I want you to think about, what if you currently, the way you treat money, what if you started treating oxygen that way? Okay, how many of us would die within a week? Right? If you treated oxygen the way you treated money, like, oh, there's not enough, I better limit my breaths, or you overdo it and you're trying to get all the breath before everyone else does, or you see some guy over there that's breathing great and you're like, he's a 1% breather, let's kill him, he's taking everyone else's oxygen. It wouldn't work. Right now, on the flip side, let's change it. What if you were able today to treat money the way that you treat oxygen? You don't think about how many breaths you have left. You don't worry about if there's enough to go around. You take what you need and you let it go when you're done. That's how money should be treated. Okay. Now, the reason why we can treat oxygen this way is because we don't have the consideration that it's scarce. Right? We don't have this idea like, oh, there's not enough out there. Because we know, like, if I need some, it's there. So I don't have this like, oh, I have to have, or I can't have, or I have to get rid of it. Like, we just don't think about it. In your day-to-day life, who's ever had that experience, like, where you accidentally like pay attention to your breathing? Yeah, I've only had this a couple of times where you accidentally think about it, and then you start thinking about, oh, I'm breathing, and then you're like putting effort behind breathing, and it's this weird thing, right? For a split second, you're like aware of the fact that you have to make sure you breathe. Who's ever had that, right? It's weird. Okay, I don't enjoy it. So I think most people treat money that way. And the way to flip it is what we're going to talk about today, is we have to get rid of, this environment that's been created that money is scarce, money is difficult, money is complex, money is confusing. You need someone else. There's not enough to go around. You better save it. You better not spend it. You better give it to these people. You better avoid this thing. Like, there's all these things in the environment that make money unsafe. And they make it confusing, and it makes us feel like we're not able to control it and be responsible for it and do a good job with it in our own lives. Okay. The third thing I want to make sure we've got our focus on is that no know-it-alls allowed on my webinars, right? The way that you get good at something is frequency. So just because you heard it before doesn't mean you have it figured out. Just because you've seen it before doesn't mean you're a master. I went to the gym today again. I went to the gym yesterday, the day before, because you don't just do something once and expect that you're a professional and you're going to get the results. Right? So seeing something more often, learning about it, repeating it, going over and over and over, drilling it down and making sure I've got it, right? Those are the things we've got to do in order to be successful with information. Okay, and that means that I have to get rid of the idea that I know this all already. There's no reason to learn. I've already done this. I've already seen this. I don't have anything to learn. And that's going to immediately shut the door for me to learn anything. Okay, that's the person who doesn't think they can learn, or the person that doesn't think they need to. We want to remove those. Okay. Next thing is questions, guys. I want this to be a two-way flow of communication. So I love seeing your comments in the chat. Drop comments, questions. I do like to go live from time to time if we can, to just talk with you with the mic on. I don't always get to talk with everybody. I've got my whole staff. I'm kind of wearing the CEO role now. And it used to be that I would talk with everyone myself, and I don't have the ability to always do that. So if you're like, man, I'd love to talk with Jerry, this is often the time to do that. So drop your questions in the chat. I would love to have a conversation with you live today and help you out in whatever way we can. And then finally, a couple of things. So I want to bring on Rodrigo Torres. He's on my team. He's one of our lead ambassadors for Wealth Dynamics. And Rod is going to be focused on reaching out to you today in the chat. So if you get a message from Rod, okay, there's a couple things Rod's looking to do. The first one is he's looking to help you get a copy of our book. Okay, and I'm going to share this with you on my screen so that you can see it. We have a book called Blueprint to Financial Freedom, right? And in that book, we focus on helping people learn the steps to build wealth. Let me find it really quick. And so we're giving away a free copy. I want to just pull it up really quick so you guys can see it. Here we go. Blueprint. We're giving away a free copy. You cover your shipping. And so Rod might reach out to you today to help you get that free copy. So that you are able to take advantage of that offer and start getting financial education. Okay. This was the last 10, 12 years of my work, my efforts to learn finances and apply it in my own life, to then say, wow, this took me a decade to figure out, right? We don't need to add a decade of time to everyone else's progress. Let's write down all the stuff I learned. Let's put it in a book. Let's do the sequence the same way the top 1% do it, so that an individual can go through and start learning about this stuff. Right. So if you don't currently have a copy of the book, I want you to reach out to Rodrigo, or you can go to jerryfetta.com/B2F promo. If you go to jerryfetta.com/B2F promo, you can get a copy of the book for free. You cover your own shipping. We'll send it out to you. And then we'll also help you implement the information. And if you don't feel like you need help, then you can do all of it yourself. I wrote the book in that fashion where somebody could say, good, I got it. I understand. I don't really need the help. Let me just run with the information. Right? I didn't have help when I built it. Now I can tell you, I wish I did, because there's a lot of things that I had to figure out. How does it work? Where do I go? Who do I work with? What's the right tool? And it added some extra time. So if I would have had guidance and someone that says, hey, do this specific thing at this specific time with these specific people, it would have just cut time out of the equation for me. Right. So again, jerryfetta.com/V2F promo. The other thing that Rodrigo will be doing is reaching out to you to set an appointment. Right. So right now on this webinar, I see that we have 34, 35 attendees live at this time. I would like to see 35 calendared appointments on Rod's schedule this week. Okay, I want your help. If you guys can help me with this, I want to overwhelm Rod's schedule with phone calls, helping you guys. Right? If you're a current client, like schedule a time with Rod to catch up and just find out where are you at with your blueprint, where are you at with your finances, and what's your next step, and how can he help you get there faster? Right? If you bought a book before or you follow content, you're like, hey, I'm ready to set up a sacred account. Schedule with Rodrigo, get on his calendar. It costs you nothing. Get on his calendar, ask all of your questions and find out, how do I get started and what does my account need to look like? Right, Rod's going to help you do that. James says, what's the link for the book? I need to get that to some people. So the book link, I'll go ahead and post this in the chat. Okay, this is going to be jerryfetta.com/V2F promo. Okay, James, you can get the book there. And I love that. James is thinking with giving the book to other people. That's the definition of an ambassador. Right, you're an authorized representative of our brand, of our education, getting that information to other people, sharing the truth about money with those that are around you that you care about because you want them to have the truth, right? So, with Rod, if you're scheduling an appointment, right? Like if you're a current client, schedule that. If you're you bought a book, you followed, you're ready to do your first sacred account, schedule with Rod. If you've never seen any of our stuff and you're brand new, still schedule with Rod because he's going to be able to answer your questions. We have tons of content out there, and that's the beauty of the business that we have here. But the downside is it can take a while to get through, right? So if you can say, instead of swimming through the entire ocean to find, the needle in the haystack, I can just go ask Rod for the needle, and Rod's going to tell me the answer to my question, and boom, I've saved some time there, right? So without further ado, I do want to open this up to the concept of the sacred account. Okay, and I do see a couple questions. Let me pull up a few questions here. All right, let me just see if we have any questions we can answer before I jump into this, just because I don't want to bypass anybody's questions. So again, check your messages for a message from Rod. Check your chat. If Rod sent you a message, respond back. Send him your phone number so you can schedule a call with him. Okay, so a couple of goals. Someone here wants to learn about financial freedom, taking care of parents, more freedoms. That's awesome. We have a question. What is the most beneficial things to invest in? Okay, we can definitely cover that one. So, investing, and I'm going to cover, something called the triangle of wealth. Okay, the triangle of wealth is really kind of a starting point for everything, right? So the triangle of wealth looks like this. It's obviously a triangle, right? The first point of this is we need to earn. We need to earn income. We then need to save. And then we need to invest. Okay. Now, an earn, what people get caught up with on is, and to answer this question is like, how do I do the earning? Where do I do that? How do I do that? What's my vehicle? And I usually say, do more of what you already do. Okay. If you're already earning income, do more of what you already do. Doesn't matter whether you like it or not. The goal is to be free, not to be comfortable. Right. So when I first started earning income, I'm going to go work more hours at the pizza job that I hated. I didn't like delivering pizza. I had that as my income source, but I knew that's my income source. I need to just do more of that, right? It's not going to be forever. It's going to be for a few more years. Okay. The second part is to save. Okay. Most people skip this one. They think I'm going to earn and then I'm going to spend everything, or I'm going to earn and I'm going to take my earnings and try and go directly into investing. Okay, big mistake. Usually when you go directly into investing, you're investing with Wall Street. You don't have control of it. The idea that I'm going to give them a percentage of my paycheck every month to put it into mutual funds that I don't understand, to own companies that I've never researched, to hopefully get some growth, but a guarantee is only that they're going to charge fees. Like, that's not a model that I like. So I think most people need to save. Okay, now we've all heard it's not just what you make, it's what you keep. It's also not just what you keep, it's where you keep it. Okay, saving means I'm going to put it somewhere where I have control over. I can keep it safe. I can use it. I can access it. It's protected. Okay, so that would mean that I have, let's say I have food. I put food in my fridge to save it. Right? I wouldn't put food in someone else's fridge. That wouldn't make any sense. Why would I buy my groceries, go to your house and put it in your fridge so that I could come back and use it later? Right? That would be weird, but we do that with our money. We put it in someone else's bank. We put it in someone else's savings account. When I say someone else's, that savings account is the bank product. It's not ours. That's not your fridge, that's their fridge. Why would you buy milk and stick it in their fridge? You need to use it. Right? So saving, this is where we're going to talk about today, the sacred account. Once we've built up enough to save, we then invest. Until somebody has passive income that exceeds their savings, expenses, and taxes, we call this PI, greater than set. Okay, until someone achieves this, every single thing that we do to invest should increase our income. Okay, now the little known secret that a lot of times we don't learn is that these first investments are actually going to increase our active income. Meaning if I'm not saving 40% of my income, 40% of my gross income, okay, 40% of gross income, this actually comes from the top 1%. This is the very first statistic that you all should be able to achieve, is saving 40% of my gross income. Okay, now if I make $5,000 a month, I can't save 40% of my gross income, which now flies in the face of the traditional get a job, work your 40 years, stick it in a retirement account, leave when you're 65 and die before the money runs out. That doesn't work, right? Statistically, that plan is failing people. Okay, so for me to save 40% of my gross income, I have to earn a lot of income. Okay, if I make 10 grand, that means I'm putting 4 aside before I pay my taxes. My taxes are probably another 2. Right, so 10 minus 4 puts me at 6. I pay 2 grand to taxes. You know, I've got $4,000 left over to pay for my mortgage or my rent, my groceries, my car, my utilities, all that stuff. Maybe, just maybe, someone can make it on 10 grand a month. Okay, the problem is the average American household only makes maybe 55, 60,000 a year. So that's not 10 grand. So I've got to increase my income. So now what am I investing in initially? I'm investing in things that increase my active income. Okay, I need to invest in things that improve my skill set, that make me worth more in the marketplace. Right. And so that's going to be, you know, courses, that's going to be training, that's going to be certifications, that's going to be new skill sets, that's going to be, you know, learning how to sell, learning how to market, learning how to do more of whatever my craft is. Right. The other thing that's going to be is personal development. Right. There's like, you know, very honed in, like I'm an engineer, I need to learn how to do engineering. Okay, so I'm going to invest in that. I'm going to go take courses on engineering, but then there's also the other side that's more general. I'm a human being that needs to understand how to think, solve problems, communicate, and get rid of mental blocks. So I need to invest in that as well. And by investing in those two things, those will increase my active income. Okay, when I increase my active income, I'll be able to start saving more and I'll hit that 40% savings rate. Once I've done that, I'll accumulate more savings. I'll be able to build up my first 50 grand is usually about the number. And I'll be able to start investing now for passive income. Okay, the passive income is a long, slow game. It's going to take years and years and years of repeating the same successful actions into investments that do not lose money and they make money. Okay, so I want to invest in things that produce passive income. For me, I like real estate. Specifically, my favorite thing to invest in is seller finance real estate. It's a form of private lending. I also like gold leasing. And those are kind of the two things that we do with someone as they're starting to build up their passive income, right? And we want to do this until our passive income exceeds our savings, expenses, and taxes, right? And we continue that over and over and over. What happens is eventually, someone asked a question about retirement, eventually this number exceeds our earned income. We no longer have the obligation of trading time for money anymore. We can unplug from the job, right? And we can start living life intentionally because we don't have to go to work. Doesn't mean we're not going to work. It doesn't mean we're not going to be valuable as human beings and solve problems for others, but it means we're not small-minded now where it's like, crap, I can't do this because I have to make a paycheck to pay this bill. Your investments cover the paycheck. Okay, again, flies in the face of the traditional retirement model. The traditional retirement model was created by banks, Wall Street, and institutions to keep people in one location, to keep them working until they're 60 and then recycle them out when they're too old. Right? The average retiree runs out of money within 10 years. That's not a system that we teach. Right. So, and I see another question relating to this that I'm going to get to in a second. So when I'm investing, it's again, investing in myself, investing in my active income sources, right? Then I'm investing in my passive income sources, all along investing in my financial education. right? Because what can happen is if I'm not financially educated and I earn and I invest in my skill sets and I get, all this extra income and savings, and then I make my first real investment, my big boy investment, and I put it in some deal, and then I didn't have the education and I lose the money. Now I'm back at square one, right? So I've got to have the education. That's got to be there too. So to answer that question on what should I invest in right now, I hope that was helpful. Let's see here. Some good questions already. Okay, so we have a question on earning passive income. Tariq says I'm a follower. That's awesome. Tariq, so get set up with Rodrigo. Rodrigo, if you want to send Tariq a message and you can get him set up with an appointment with the book. Robert, I want to be my own boss and pay off student loans. Okay, so Robert, we have a program for student loans that might be able to help you get those handled faster. So if you want to reach out again to Rodrigo, set up an appointment with him, he might be able to help you with that. Same thing with being your own boss. That's something we can help with as well. Avery says, I'd like to cover aligning values and skill set with making the right choices with opportunities that arise. That's a very good question. So Avery is a client of mine. I want to take some time to answer his question. So aligning values and skill set with making the right choices with opportunities that arrive. And that's kind of a roundabout way of saying, like, what should I do long-term to earn income? What's the right opportunity for me, right? So here is what I would look at, a couple of things. I would look at something that I have actually a track record at. That's the first thing. What's my track record? Where have I actually produced? Okay, that's the first place I'm going to go to earn income. What have I already done before successfully? Doesn't mean it's the same company, but what's the skill set, right? So again, if I'm an engineer and all of a sudden I'm like, I want to be, a movie producer. Cool. I'm probably not going to make money at that very fast. I should keep doing engineer stuff till I'm there, right? So the track record is a big piece. What am I good at? What's my historical like? And then the other part here is, what are my interests? Okay, where are my interests? What am I interested in? Okay, the interests are generally going to be aligned with your purpose. Okay, people are interested in things that are important to them. Feels like it's part of their mission, part of their life, part of their core values. Okay, the other part here is I need to find the right company. I'm going to say something here that probably most of us have heard contrary to. Most people should not go start their own business. Okay, 90% of businesses fail in the first 5 years. That means 9 out of 10 people, they're not going to make it. We already know that. The failure rate is super high. If you're one of the 10 that's going to make it, then don't take this as discouragement. I'm just saying the odds are not in your favor, right? Like for me, even today, 10, 12 years into this, and I've scratched and scraped by and continued to grow and gone through hard times and good times, and it's not easy. Even today, it's not easy, right? So if you can find a company that's going to let you be what I would consider an intrapreneur, you don't need to reinvent the entire wheel. You can just take your track record and skills and your interests and plug into an existing show and just go play. You're going to make money a lot quicker, right? Now, with that being said, that's where it's important to find the right company. They align with your core values. They're growing the way that you're growing. You're going in the same direction. There needs to be alignment here. This is the big thing, alignment. Okay, opportunity. And of course, income. There should not be a cap on your income. Any company that you want to go to work in and my purpose for working would be to further my personal wealth and then fund a life of abundance and prosperity in all areas, right? I need to have income. I need to be able to have this in a fashion that's unlimited. No cap. Okay, if I add more value, I can increase what I earn. Super important. Okay, and then finally, I would say the next part is the leadership. Okay, the leadership. For me personally, and I obviously own my own company and I've built this up over the last decade or more. And so when I look at leadership, like let's say I was starting over from scratch today, I would find someone that's ambitious, that's aggressive, that's thinking outside the box, that has a track record of success as well, right? These are all very important components. And so, a lot of times you might find something like, I'm interested in this, I'm good at it, I like the people, I like the company, the leadership might not be a fit. Right? Like I don't want to work with a company where the owners have been at it 40 years and they're on the way out. They're 40 years into it and they're like, okay, I'm done. I want to go where there's still growth with the leadership. They're still pushing. right? That's the game maker. They're the one that's going to make me more excited to come to work every day. They're going to be thinking about how do we serve our customers better? How do we grow the opportunity? How do we make things bigger and more expansive? And that's leadership. So, these are 4 of the main things I would be looking at, Avery. And then finally is once you find that, the 5th one is just commitment. Stick with one thing for a long time until you're the best at it. Okay, if you can check off all these boxes and you've got no consideration on any of these, then it's just outlast everybody. Okay, outlast everybody, add value, like be the one person that the leadership never has to worry about. I don't need to worry if that person's going to listen or they're going to do things incorrectly or if they're going to leave. Like I have employees like this now where it's like we just brought on a new staff, a few weeks back, and the guy is phenomenal, right? Like I never worry about whether this person is getting things done. I'm like, yeah, I know they are, right? I've got current staff we've had for a couple of years where that's not the case. They don't stay very long, right? And it's always like, did they actually follow? Did they actually get things done? So I would say that commitment piece is a very big component of that. So I hope that answers your question, Avery. All right, let's see what other questions we have here. Okay, Casey has a question. Coaching for people starting small businesses. Investors, business owners get the best tax treatment, best opportunities, and the ability to scale income at a much greater rate, which is pivotal to the wealth dynamics, earn, save, and invest strategies. Small business coaching would complement wealth dynamics, other services in a big way. Casey, you read my mind. We're working on something like this actually for small business owners. Now, to kind of reiterate what I just said, the average person should not try and be a business owner. I would find a system, even if you're a 1099 and you're a business owner, I would plug into something that already exists, right? If I could plug into, a licensee program or a franchise or something like that, where the hard work has already been done, and then I can just go in there and run something that already works, drive a car that already has wheels rather than building it from the ground up myself, I definitely would aim for that. So we are going to be looking at a small business coaching service. It's mostly going to be geared towards our ambassadors. Our ambassadors are current clients who are winning on our service and have been authorized to represent our brand to share the truth about money with those around them. Okay, we want to help you be successful, right? I have been able to earn multiple 7 figures a year for multiple years in a row now, all before the age of 30. And so I'm looking for people that I want to help do that same thing, right? I want people that are like, hey, I want to earn 7 figures because I want to do really good things with that money. I want to build wealth. I want to help others. I want to add value. And so we're setting up a coaching program for people that have that ambition and have the capability to do that, so we can help them, kind of just cut some corners and do things faster. Let's see here. Any other questions here? I see a couple more questions that have come up. Ben says, it's my first time. I'm hoping to open the Sacred account. Ben, I promise you we will talk about the Sacred account today. I like to cover the questions here just to get these all taken care of. Chris says, I'm hyped to get the ball rolling, tired of talking, overthinking my way out of things. That's great, Chris. Overthinking, I always say, like, less thinking, more action, right? Like I can fail and retry and get it right faster than somebody that overthinks and tries to do it right the first time one way, right? Like I can run in all these different directions and still get to the finish line sooner. So, learning is failure. Thinking is just like compartmentalizing it all in our heads and imagining scenarios. Go out there and do and observe and see. And that's where you actually learn, because you see how things actually work. So that's a great realization. So again, the book link here, if you want to grab the book, jerryfetta.com/V2F promo. Let's see. I see a few more questions. We have a question from Susan. You get the impression that you want to work with younger people. Maybe you could put someone on your staff to work with the already retired people already. You seem like a very ambitious individual. Yeah, so that's a good point. So Susan brings up, so our target audience is not necessarily younger people. It's people that want to build wealth, right? So the first part of that is retirement is not wealth. So we don't actually agree with the concept of retirement. So if someone's like, hey, I've already quit earning income, then that's one of the very first things we're going to say is, hey, you need to go earn more income so you can save more, so you can invest more, right? So if somebody's already retired, I will kind of show you what we would do and what that might look like, because we do have clients like this. The first thing is we're going to look at, taking the current scene, the current investments, the current everything, and aligning those to actually build more wealth. Because the average retiree, they're being taught, you retire and then you start drawing off and selling assets over time. and it dwindles down, like your net worth decreases during retirement, and it actually puts you at risk. If you sell all of the assets before you die, now you're broke in retirement. We don't want that, right? So one of the first things we're going to do is we're going to look at self-directing your retirement accounts. Okay, what does that mean? Self-directing retirement accounts. An example of this is we have a client that we just recently helped. He came to us with about $500,000 in an old retirement. Okay, and so this was with Wall Street. Like this was in the normal target date mutual fund or exchange traded fund or stocks or bonds. And so we looked at this and we're like, okay, good. So here's what's going to happen is if you keep it here, number one, at some point you're going to have to sell the assets, right? Like you're going to be literally selling off. You've got the thing of the golden goose that lays the golden eggs. You're killing the goose. At some point you're going to kill the goose because you're going to need it for food. Right, that's the retirement model. We sell off assets. We invest in stocks and bonds. We hope that they go up in price over time, and then we can sell them to someone else that wants them more than we do at a higher price than we paid. Awesome, but now we just sold the asset. We got rid of the asset that was going to pay us. Okay, a stock portfolio and a bond portfolio generally doesn't pay very much income if you don't sell the asset. You might get 2 to 4% gross of fees, meaning before your fees come out. The average fee cost expense drag in a mutual fund is usually about 4% annually, right? So you're really not seeing any of that income if you don't sell because that is your cost. Okay, now you might be looking at, oh, well, I looked at my management stuff and it said my fee is only 1.25%. Yeah, that's your annual management fee and your 12B1 fee. There's other fees, there's account fees, right? There's cash drag, there's turnover, there's all sorts of other internal costs and components inside of a fund. And that usually does add up to about 4%. Okay, that's how Wall Street makes their money. They want a giant pool of assets of people that never take the money out, right, for a very long time. And then when they do take the money out, they want to limit that. They tell you, oh, live below your means. Don't take out too much. Well, that's because if you take out too much, it draws down their pool of assets and they make less in fees. Right, just that difference in alignment. I want to point that out is if I'm saying, okay, I want to build wealth. Right, I want to live a life of abundance and prosperity in all areas. And then I've got a group that's saying, good, give us all your money, as much as you possibly can afford for the next 40 years. And we're going to keep it. We can't guarantee anything. We can't tell you we're going to make it. We can't tell you we're not going to lose it. There's no guarantees other than the fact that you're going to pay us. Right. And actually, when you take money out, we actually lose compensation. We're not aligned in values at that point. Right, like I would feel more comfortable investing with a group that was like, hey, we only get paid on the money you take out. Right, like imagine that. I wouldn't want to take the money out because I would be like, well, I want to leave it there. Right, I don't want to pay the fee. If I leave it there, I don't pay the fee. So it actually works better in that fashion, right? Like, but then Wall Street would be like, hey, we want you taking income. We want you using this for its intended purpose. Right, so they're actually pushing me to use the income, not let it sit there with them while they use it. Right. And then that aligns our interests. Like they want to make sure the money's there. They lose all of my money. I can't take out profit. They wouldn't get paid. See, I think that's a great way to model that. But instead they say, hey, we're going to get paid 1 or 2 or 3% every single year, whether you make, whether you lose. Right. So we get rid of this model. So that's the first thing we're going to look at is we're going to self-direct. This individual, like I said, had about $500,000 in retirement accounts. And so the first thing we looked at is we said, how do we convert this into a passive income stream that you do not have to sell? So what we did is we rolled the money over into a self-directed retirement account. Self-directed retirement account, you can roll money over into it penalty-free and tax-free, right? So I can go from my current 401k or my 403b and move that into a self-directed account. It's still going to be tax-free or tax-deferred depending on whether you're a Roth or a pre-tax account. But the self-directed account is not attached to Wall Street. I can buy something other than mutual funds. Right, so I can actually buy like real assets. This particular case, this individual bought 10 homes. He had $500,000, right? So we actually had him purchase 10 homes inside of his retirement account. This is not pieces of paper that say he owns homes. This is actually he bought 10 homes. His retirement account is on the title of 10 actual physical pieces of real estate. Okay, he's going to be making about $500 to $600 a month in mortgage payments on each of these homes. So we took $500,000. We've now turned this into an income of about 5 to 6K on a monthly basis, right? So here's the first thing. He doesn't need to sell this, right? He can take the 5 to 6K a month and draw from if he needs to, and he's never going to touch the principal. And it's backed by real estate. It's a real property. It's not going to go up and down with the stock market. Nobody can steal his stuff. Nobody can commit fraud. It's a house, right? We set it up on a seller financing note, so he's not a landlord. The people that live there are responsible for their repairs, their maintenance, their utilities, their taxes, their insurance. Our partner company runs the escrow to make sure all those things get covered. So our client's not a landlord. They're not going to ever be called and be like, hey, my toilet broke, right? Now, the reality is this client does not need to live on this 5 to 6K a month right now because he understands the triangle of wealth. He still needs to earn. He's not rich on $500,000, so he still needs to earn active income, save, and invest. And so this 5 to 6K a month, he can now just let it accrue and grow. And in 10 months, he's going to have enough for another house. Okay, he's going to add another $500 to $600 a month at that point. And then in another 8 to 9 months, he's going to have enough for another house. Okay, so he'll have 2 homes now, and then he'll have another one, and then another one, because it keeps stacking it up. By the time he actually needs it for retirement, his income on this is going to probably be $15,000 to $20,000 a month passive. He's going to have off of that probably, $1 to $2 million in real estate, and that's going to pay him every month for the rest of his life without ever touching it or selling it. Right? That's much better than retirement because he's not getting rid of the asset. He's in control of it. It's real. It can't go up and down. There's not these percentage-based management fees that Wall Street charges, and he's in control of his money. Okay, so this would be the first place we usually start with someone that is a retiree or they're a pre-retiree, is we want to get them in a position where they're able to actually own real assets and be kind of more in control of the money, right? And more at cost. Okay, the second thing is whether or not that individual is actually in a position where they've got passive income that achieves their or exceeds their savings, expenses, and taxes. This is the goal. So we don't believe in retirement. We believe in PI greater than set. Okay, and so this might mean, hey, we tell you, you should work a couple more years, right? Or you should do the business you've always thought of, or do something to bring in some extra income to build. It's not so that you can supplement your living, it's so that you can build and save and grow and further secure your wealth, right? And that's something we're going to look at. So it is a little bit different for someone that's older and nearing retirement or in retirement, that's for sure. But our model entirely is different. We're in a different set of rules and a different game altogether. Okay, good. So the next question I see here, we've got lots of good questions today. How do you get people to realize the urgency for improving their finances? There's no question that this house of fiat currency cards are definitely falling down. That's a great question. So I don't, and I've learned this one the hard way, Nick. I don't think you can tell someone, hey, the world's about to end, you better hurry up and get your house in order. Right? Like they're thinking about like here, right? They're like, I had a fight with my wife today, or I don't like my job, or my kid has a bad grade in school. Like their problems are so in their own sphere of influence. They're not thinking about like, oh, what's the World Economic Forum doing? Or what did the central banks do? Or what's happening across the world right now with investing? Like they're not thinking about those things. Right. So if we insert them, it's a bit out of their reality to be like, hey, the sky is falling down economically. You might want to change everything you know about finances. And here's the thing is most people aren't even doing the things they do know about finances. Like if the 401k was the right answer, they're not putting money into it enough still to make it do anything. Right. If giving money to a bank was the right answer, they're still not saving enough for it to actually help. So even based on the false premise of the stuff they're already doing, which isn't correct stuff, they're not doing enough of volume in that to actually make an effect. So if we now say all the rules are different, the sky is falling, everything you thought about money was wrong, it actually further confuses them. Right? So the best way to do it is find something you can help them with if they're willing to be helped. If someone's not willing to be helped, there's no way to help them. Okay, but if they're willing to be helped, they can accept help. They think help is a good thing, they're open to it. Find out, hey, what's your attention on right now? And they might say, hey, I have some debt. Good. We're not even going to talk about all the stuff that Nick mentioned in his comment. We're just saying, good, I'm going to help you get out of debt. Yeah, I'm going to take one more piece of stress off your back so that you can look up and actually see what's out there. Right? Or I don't save enough money. I've got a down payment coming up for my house. I don't know what to do. Good. I'm going to help you save more money. Or I overpay in taxes. Great. I'm going to help you reduce your tax burden. So you give them something that's actually real. It's there. They're looking at it. It's currently a goal or a problem that they face today. And then you help them with that. And then once that's done, you can help them with the next one, and then the next one, and the next one. And then you get to a point where they're thinking about like long-term planning, and they're like, shoot, what is going on with the economy? How do I plan for it? How do I make sure my family is okay? Now we can start having those conversations. Great questions. Great guys. Are you guys financial advisors? No, so there's no actual thing as a financial advisor. If you look by license, there's no such thing. It's just the title. There are registered representatives which own a Series 6 license, a Series 7 license, and those are licensed to sell financial retail products, stocks, bonds, mutual funds, those types of things. We don't sell those, so we're not a registered representative. There are also investment advisors, registered investment advisors. Those are people that charge for financial advice. They also charge for money management with, again, mutual funds. They're going to charge a fee of your portfolio. We don't do any of that stuff, so we're not registered investment advisors, right? So really, like financial advisor, anyone could call themselves one. There's not really like a license for being a financial advisor. You can be a registered rep, you can be an independent advisor representative, a registered investment advisor, you could be a stockbroker, right? But a financial advisor is kind of this blanket statement that anyone could say they are, right? So what we do is more important than what we are. We help people with their financial education. Okay, we help people become financially solvent, and we help people achieve greater financial freedom in their lives. And that's the main stuff we do. Whether you want to call us a financial advisor or this guy I saw on YouTube, I don't really care so much about that. It's more the help that we're providing. And again, the licenses are for people who are selling those products specifically. Great questions. We have a question from Violetta. What do you think about gold IRA? So there's no such thing as a gold IRA. There is a IRA and you can buy gold with it. So those are great. We have clients that do that all the time. So it really is a self-directed IRA, which is what we set up for people. And then with that self-directed IRA, you could buy gold, you could buy silver, you could buy real estate, you could buy private lending deals, you could buy real estate. And it really is just a function of having an IRA that's open-ended and doesn't limit you to Wall Street. Now, the gold IRA, very similar to the financial advisor thing, it's kind of just a marketing term, right? Like we want to look at what is it actually? It's just an IRA, an individual retirement account that's open-ended, self-directed. I could buy gold with it. And I do think that's a great idea. So Violetta, if you have one, you're interested in one, that is something we can help you with. Maybe you reach out to Rod, or Rod, if you want to reach out to her. Awesome questions. So we've got a question here. Love your work. Here's perhaps an odd question. If someone makes $300K a year and they follow the program to the letter, what kind of general outcomes could they expect? Okay, very good. So this is basically saying, hey, if I earn a lot of income and they follow the blueprint to a T, what could I expect? You're going to make financial progress faster, so long as you follow it, to a T, like you mentioned, and we continue making progress. With people that earn lots of income, there's usually two schools of people. There's people that are very tight with it. And so then it's like we're pulling teeth just to get them to like put money in something that's not their bank account or their 401k, right? They're not willing to always invest or change. And so they just accumulate lots of cash. I know a guy that's got millions of dollars in cash. I've been telling him 4 years, dude, you need to stop putting all your money in cash, right? So he hasn't done it yet. So that might be a barrier someone runs into, is they're afraid. Right, they're in fear. They earn all this income. They don't know what to do with it, and so they're afraid and they leave it there. And because of that, they never make the progress they're supposed to, even though they've read our stuff or watched our stuff. Right. Second is someone that's like very free with their income. They earn a lot, therefore they spend a lot. I know another guy that earns about 300K. Almost always he's broke. Right. So if I earn lots of income, which I am someone that does, the first thing I'm going to do is I'm going to get rid of it by putting it in my sacred account. I'm going to put it in real stores of value so that it's not there. I can't spend it on things that don't help me build wealth. I don't stick it in the banking system and become victim to them, or with Wall Street. Right? I'm going to have control of it. Right? So the general outcome someone could expect is if you earn more, you're going to be able to save more. Right? If I save more and also I put that more in the right locations, that's going to help me build wealth faster. Then I take that money and I invest it. Right. And I invest it again in things that produce passive income. If I already earn enough to save 40%, I'm not saying don't invest in yourself, but I'm saying I could start doing some other investments now. I could start doing real estate. I could start doing private lending. I could start doing gold leasing. And I could do all that stuff today. So I'm going to be able to invest sooner, build the passive income sooner, and really just get through the program faster is what that comes down to. How do you differ from Bank on Yourself concept from Pamela Yellen? I asked her how she was similar to your sacred account strategy. Her answer was she's not familiar with both dynamics. So I actually used to work with Pamela and Bank on Yourself. So their strategy is more, I would say, more retail, right? Like if you read the book, it talks about, put money in this life insurance and then use it for retirement and vacations. If that's someone's focus, great, right? Like you could do that. We'll set up the same thing. I would say that we're probably better. Like their policy design is similar to ours. We work with those that actually use the concept. They've invested with it. And so, we're actually speaking from firsthand experience. Here's how you do a real estate deal with a sacred account. Here's how you self-finance a car, right? Rather than here's whole life insurance. Here's a lot of concepts about what you can do, but there's no help at the end, right? So that's probably the biggest difference. When you become a client of us with the sacred account, you get access to our mapping team. Okay, our mapping team, and this is a great segue, right? So I'm going to show you guys really quickly an illustration of an actual sacred account. And then I want to talk about really the difference. Like, why would you work with us instead of someone else? Let me see if I can find my page here. So, okay, so here is an account that I was looking at earlier. This individual in year one, they're putting $500,000 in, right? That's their lump sum dump in. Okay, so they put the account together, they're putting $500,000 in up front, then they're putting in about 50 grand a year for about the first 10 years, then it's going to drop down for the next 5 years, and then it'll drop down a bit more. Okay, so we put the account together, we've got 50,000 in. We teach that you should have 70 to 90% of that money available in year one, right? So net cash value in year one will be $458,000. So if we take that math, 458,133, and we divide that by $500,000, that is 92%, right? So that's actually a little bit more than we even teach. Like this is a really well-designed illustration. So we know that that's there. That's great. So we put in this money. We have great liquidity in year one. We can see it's growing year by year. We can see that our break even happens here. I think somewhere between year 5 or 6, and that's like proper design. Anyone with a brain and the right carrier can design a proper life insurance illustration. So you can go to Bank on Yourself, you can go to any number of agencies, Garrett Gunderson, you can go to wherever, and they're going to design this for you. They're going to say, great, here is a properly designed high yearly cash value dividend paying whole life insurance policy. Go do all the stuff you've read about. Okay, here's the problem. I gave you a car, you don't know how to drive. You're not going to use the car, or you're going to use it wrong and get in an accident. So where is the help after? I gave you, like when I bought my first BMW, you have to realize I grew up poor. So I got a BMW when I was in my early mid 20s. I had no idea how to use the thing. I was like, there's buttons. I'm used to cranking my window down. There's buttons. Like, what do I press? I couldn't figure out how to start it. You started by pressing a button. I couldn't find the button. I sat there for like 10 minutes trying to figure out, like, where do I put a key to even start the car to be able to drive it? So they had to give me a tour of the vehicle and say, here's how you use it. I would come back a couple times or call and be like, hey, what about this? What about that? Right? So that's where you really have to have like a team that's dedicated to that. Most agencies, you're working with a single agent. If he doesn't sell more life insurance policies, he doesn't eat. So there's this problem where I need to continue earning new income, but I've also got a book of clients I'm responsible for servicing. Which one do I do? Well, one of them pays me in the future. One of them already paid me. The people with all the questions already paid me. I don't get more money out of that. I need to go sell more policies. So a lot of times people will buy a policy. They don't get serviced well by the agent. Okay. The second thing is the agent oftentimes, they don't actually have the firsthand experience of this stuff. They haven't borrowed against it for a real estate deal. They haven't financed the car with it. They haven't paid off their debt with it. So they're teaching you what they read and learned and seen, but they're not like, yeah, I did that. Here's what happens. Okay. So we have a team of 9 staff called the mapping team. So when you become a client, once your policy goes in force, meaning you've funded it and signed for the delivery papers and you've got your account set up, you get unlimited access to the mapping team. You can call, email anytime and say, hey, I have this question. I need to take my first policy loan. How do I do that? I took a loan. How do I repay it? I'm looking to do a real estate deal. Can you show me the numbers? What's the right way to go about this? And our team actually does that. Nobody else does that. Okay, it doesn't matter if it's Bank on Yourself or whatever the other agency. No one else does that part. And so it's one thing to give someone the vehicle. It's another thing to teach them how to use it. If I give you something brand new that you've never used before and I don't teach you, I've actually given you another problem, not a solution for your finances. So that would be my answer to that question. Someone asked, what is PI greater than SET? Passive income greater than savings, expenses, and taxes. So So someone says, I'm paying $3,200 a month in credit card debt. I need advice how to get these amounts lower. I have a passive income of $2,000 a month. I have a day job with income that's okay. Okay, good. So what I would say then is I would say with an income that is okay and $3,200 a month in credit card debt, I would probably enroll that debt in either debt settlement or debt validation. It is going to hurt your credit score, but I would rather have a low credit score for a few years than have that much money going out towards debt every month. So the first thing is if I'm borrowing, I need to stop. If I've got that much debt, the first key is no longer get into debt. Quit. Like if I'm trying to lose weight, like I'm going to start going to the gym, but also I need to stop doing the thing that put me in the problem I'm in. I need to eat less. If I'm in debt, I can set up a sacred account, but if I keep borrowing money, I'm not going to be helped. Right. So I would handle that. I would stop borrowing. Then I would get into a debt settlement or validation program that's going to help me reduce the debt and handle it with the banks. It might take a couple of years. It might hurt my credit, but it's going to be a long-term solution. Then I need to change my financial habits. I need to earn more than I spend. I need to have a forced automated savings plan. And I need to be putting that money aside every month so that when I have expenses, I don't put them on credit cards. Okay, I don't put this stuff on credit cards. Like doesn't matter what it is, whether it's business, personal development, I don't use the credit card. If I use it, I pay it back, I pay it off that month. If I can't pay it off that month, I don't charge it. So that's just a difference in behavior. That's something you can learn and change. How do you make money? So we have different services we offer. Sometimes we charge a fee for those. Sometimes the product provider we work with will pay us a referral fee. The main question is, how do you make money? So as long as you make more than us, we think it's a fair deal. So if you've got questions on a specific service, you can reach out to our team and we'll go over, of course, how we get paid on that specific service. Okay, good. So financial advisors manage your portfolio and take a fee based on total assets. WS doesn't manage your portfolio. They teach you how to manage your own. Good. So that's a great question. William says, I recently watched a video you posted about working with Chris and his team. What does this mean for existing clients moving forward? That's a great question. So we started working recently with the Money Multiplier Agency with Chris Nagle. He's a partner of mine in our venture together on that. And really the focus there is helping expand faster. So we brought in 5 or 6 more carriers for sacred accounts. In addition to Guardian, in addition to Mass Mutual, we have, an entire application team. Like we're getting policies issued in weeks now. Which, as opposed to months, it was not easy during, especially the pandemic. It was like 3 months, 6 months to get a policy put in force. We've had a couple where it happened in 2 weeks now. Not saying that's the norm, but it's sped up quite a bit. And then we've also added that mapping team that I mentioned. So if you're a new client, you'll be working with us. You'll be working with the Money Multiplier Agency. If you're an existing client, you'll be working with us only. Now, if you would like to get access to the Money Multiplier Agency, the mapping team, the extra service, all you need to do is open up a second policy and then they'll actually grandfather in all your other ones. So if you're like, hey, I set one up with Guardian, the mapping thing sounds really cool. Having the extra service sounds really cool. Great, let's look at how do we set up another policy, and then all of your existing ones can get grandfathered into that, and then they'll service you on everything. Either way, you'll be taken care of. I do think you'll be taken care of better by grandfathering those policies in, by working with us and the Money Multiplier team. Just because there's more hands on deck, there's more people involved, there's more, people and individuals you can reach out to, and it just makes the service and experience easier. And their team is very, very professional. Who are some of the firms you work with to do the owner financing? Good. So we work with one firm mainly on this. So the company we work with is called Equity and Help. And the reason we work with them is I have money with them myself. I know the owner very well. They have a turnkey system. They're established. I know their executives, their board, and they do a really good job, right? So the concept of seller financing is you're buying a house, you're making minimum essential repairs to it, and then you're basically having, a family move into the house, purchase it from you at market value, which is going to be marked up above what you paid for it. So you're making money right away. And then they're paying you principal and interest over 15, 20, 30 years on a mortgage payment to live there. So the reason that we went with the company that we went with is for all the reasons I mentioned, and also it's completely turnkey. They find the house, they fix the house up. By the time you buy it, it's already done. Like you have it, they actually will go find the family to move into it. So you don't have to worry about that part. And then they manage the escrow account, they manage the financials, they make sure the insurance and taxes are being paid. If a family stops paying, they do handle the foreclosure and the eviction. So I can be completely hands-off. Okay, I don't have to go looking for real estate deals. I don't have to go to court with people on foreclosures. I don't have to do any of that, right? So that's a way to go about that as an average everyday investor. You could go become a house hacker, but here's the thing is if you're a doctor or a dentist or a sales guy or whatever, it doesn't actually help you to have to go learn a new thing that's not going to pay you as much per hour as your job does. Okay, do more of the thing that gets you more passive income and then outsource to work on the other things. Great questions. Ben says that owner finance is amazing. I agree. It's a great, great system. Okay, good. And then someone asked to see the life insurance illustration one more time. So guys, we actually didn't cover at all what I was planning on covering today, but that's fine. We answered a lot of really good questions. I do want to pull this up again. So guys, again, like the concept of the sacred account is using a properly structured high early cash value dividend paying whole life insurance policy. And so this is showing again a lump sum. Someone's putting $500,000 in. Year one, we've got about 92% liquidity on our money. Okay, we've got a good break-even period. You can see the growth of the policy, right? And so the idea would be that I've put in this money. This individual is probably going to borrow the $458K out immediately for a real estate deal. Okay, with equity and help, that is 9 homes. You could buy 9 homes with that. Okay, that's $4 or $5 grand a month in passive income. So this $500K that I put in and this $49,999 that I'm putting in every single year, this money all still grows like it never left. So while I'm borrowing against this money, I'm borrowing against my net total cash value, right? All of my principal that I put into it is still growing. Okay, each year, on average, about 3 to 5% is my annual compounding growth rate. Okay, it's also growing tax-free. Meanwhile, these are the values I can borrow against, right? So I borrow 458 in year one. Well, if I want to do another equity and help deal midway through year two, I'm going to have another 50 grand in there, right? So what happens is I have the equity and help deal over here that I'm borrowing for, paying me 8 to 12%. In addition to that, my money is still earning 3 to 5% like it never left. Now, if I structure this correctly, my cost of borrowing is going to be about a 1 to 3% interest cost. Right? So if I do the math on this, if I'm making 12 over here, I'm making 5 over here, and it costs me 3, right? 12 plus 5, that's 17. 17 minus 3, my net return on this is 14%. If I did only the equity and help deal, I'm only making 12. If I did only the sacred account, I'm only making 5 at the max. Right? If I do both, I'm making 14. Okay, that's the beauty of the system. This is what banks do, right? And this is why at the very beginning I said this is different, right? Now, here's the other thing that's different is with that, I also have an almost $11 million death benefit. So if I keep borrowing, repaying all the way down the line, I get down to the very bottom of this policy, I'm now in my 80s. I've got, where's our net cash value here? I've got $3.8 million in cash value growing like it never left. Right? I'm down here, I've got $5 million in death benefit. Okay, I go down to age 120, right? When the policy endows, if I haven't died yet, I have accumulated $10 million in cash value, right? I've got 10.2 in death benefit. I'm gonna get that paid out tax-free, but the entire time I'm using it. So let's say I'm using it and I pass away when I'm 90 years old. Okay, I would have accumulated a total of $4.8 million just in my cash value. Okay, I would have had that equally borrowed out in loans. Doing equity and help deals, like $4.8 million collectively each year. I'm putting money towards these deals. They're paying me 8 to 12%. I'm reinvesting that. At some point, I'm living off of it, right? And then I still have my death benefit that pays out too, right? Like one of the questions that someone asked at the very beginning of this webinar today was, how do I build financial freedom and take care of my family at the same time? You secure the ending. Okay, you secure the ending with the death benefit, right? Wall Street's not guaranteed. The banks aren't guaranteed. The death benefit that's a contractual guarantee. The money's actually there. They're setting a reserve aside. These are companies that have been paying out for 200 plus years, right? So I secure the ending. I say, I'm going to do this life insurance policy. Therefore, when I pass away, no matter what, my wife, my kids, my whoever is going to be financially secure. Right. And then I, in the meantime, can start borrowing against it and using it to build wealth and shore up the difference so that if I can build wealth, if I can build financial freedom, I do that. I achieve that in this lifetime. And if I don't, doesn't matter. They're taken care of either way. They start off better than I did. They start off where I left off. And they're going to anyways. That's the thing. Like if I have kids, they're going to start off where I left off. If I left off with a bunch of debt, I'm spending more than I earn. no financial education, they're going to start out with a bunch of debt, spending more than they earn, and no financial education. It comes down to responsibility. It's not just about me. And that's why, like the retirement thing, it's just about me. I'm tired of working. That's it. That's the reason behind retirement. I'm tired of working. For me, that's a selfish purpose. There's got to be more than that. Right? I don't want to build wealth because I'm tired of working. I want to build wealth because I don't need all that. Okay, what I need is very limited. You guys would be surprised. I don't spend a bunch of money on stuff. I'm not one of those guys. Like just to buy new jeans. I hadn't bought new jeans in years because I was like, why do I need, I'm not going to spend $50 on jeans. Like, what do they do? Like, what? I'm from Alaska. That's not a big thing. I wasn't raised that way. That's insane to me. But I look at, okay, well, I could invest that money instead. Okay, I can give it to my church. I can donate it. I can help people. I can spend it on education. I can do, so when I build wealth, I'm not doing it because it's what I need. It's because I have the capability to build abundance and prosperity, and the world needs that. They need more good people that have money that are willing to help. That's my goal and mission. I want more good people that have money. So if you're a good person, I can't make you a good person. So if you're not a good person, then I can't help you. I don't want to. But I don't want to help a bad person make money. So if you're already a good person, you already qualify. Okay, then my job is to help you become financially educated and utilize these strategies to build wealth for yourself so that you can start helping. Not even giving back, like you didn't take it from anyone. There's no one to give it back to. That whole phrase, I hate that. You didn't take it from anyone. You're just giving. What's wrong with just giving? Giving to give. It's the right thing to do. It's helpful. It's good. It improves humanity, right? Even the investments we do, equity and help. You're providing help to a family that couldn't otherwise get a home. Their option is $1,100, $1,200 a month on rent or homeless. You're giving them a home that they actually own for like $600 a month. They're going to build equity. Their life has changed. Right? Like with our accredited investments, we're lining up a whole portfolio this year of accredited investments that are going to help, like things like purifying the water so that people have access to good water, right? Things like cleaning up the planet, getting rid of the trash on it, things like helping families detect illnesses through AI technology before they're diagnosed, right? I want to invest in that. How do I invest in getting education in school so kids actually learn? Not so they just graduate with a grade, like they actually learn, they actually are intelligent, they're able when they come out, right? That's what we're investing in. So when we talk about wealth, like this is all the stuff we're talking about. So Ben says, how can we get started if we don't have 500K? So you can start with as little as, and here's the way this math works. With the sacred account design, if you are under the age of 50, under age 50, your premium is going to be 10 times age. That's your monthly premium. So if I'm 20 years old, my premium will be 10 times $2,200 a month. If I'm 25 years old, my premium will be $250 a month. If I'm 50, my premium would be $500 a month. That's going to be my contribution. If I'm over age 50, because of the way a policy is designed, the cost of insurance will go up pretty tremendously if I'm over age 50. So if I'm over age 50, then it's going to be 15 times my age. Right? So you can start with that as the minimum. Obviously, you can also put in lump sums if you've got, a lot of times we'll talk to clients who are like, good, I want to start with, I'm 40 years old. I want to start with $400 a month, but I also have a $10,000 lump sum saved up in cash. I want to drop that into. So you can also do lump sum. So then you don't need $500,000 to start this. My very first policy was like $250 a month, something like that. And that helped me get started. And then I was able to open another one and another one. Our team thinks with that. We think about, okay, this person, we want them to have, just like a bank. You see Chase Bank. How many locations do they have? They don't have just one. Same thing with Wells Fargo. They don't have just one. So you don't want to just have one sacred account. You want to have many of them. And now we've got 5 or 6 companies we can run them with. Our team, when they're designing your first one, they're already thinking about how do we design the first one so it's easier for you to get your second one. So that the underwriting is taken care of. The company is like looking at the illustrations. They understand there's not going to be a bunch of questions and problems. It's like we just get the first one started, you get rolling, and then as soon as you tell us, hey, I want to open up another one, they're like, great, here's what we need to do. Let's get you your second location, your second bank, right? So that's the minimums on these accounts. And we have clients, like I'm helping a client right now. He's going to be doing $2 million a month. right? So this is not a one size fits all strategy. Everyone's different. This is going to be a family office that has a lot of profit coming through it, and they want to do the banking system with that money. So they're going to do $2 million a month. Okay, and we have a client that just signed up, referral from the parents of one of our ambassadors. They're going to do 500 a month. Okay, so that's part of the importance. Again, I want to end on this note. If you've not scheduled a call with Rodrigo, okay, I want you to reach out to Rod in the chat, okay, and schedule a call with him now. Send him a message, say, hey, I'm ready to get started. Okay, and again, if you've not gotten a copy of my book, this is the starting point, right? I decided this maybe 5 years ago that I wasn't willing to work with clients that aren't willing to learn. Okay, so if you're a client that or want to become a client, the first step we're going to say, good, go invest in your education. Okay, you need to understand how this works. This is not the traditional system of you give us the money and we stick it in the oven at 350 for 40 years and you pull it out and hopefully it's done. This is, you're in the driver's seat. Now we're going to help. We're there, we're going to answer questions, we're going to guide you, but we want to teach you. And in order to learn something, someone has to study. So for me, that's a filter. If someone's unwilling to study, they don't meet the first 3 points of what I said today. They don't have a purpose. Okay, they have the idea that money's too complicated, or they have the idea that they know it all. They don't need to learn. Okay, I'm very learning oriented. So you don't have to be young, you don't have to be a male, a female, black, white. You have to be able to learn. You have to be willing to open a book and read it and actually learn and understand what we're doing. Okay, so this is your starting point. Go to jerryfetta.com/B2F promo, get the book. Okay, you can read the entire thing in 6 hours. If I'm saying I want to build wealth, but also I'm not willing to read for 6 hours, what is that? Like, I'm not going to build. Am I kidding? It's like, I want to lose weight, but I'm not willing to go to the gym. I want to lose weight, but I'm not willing to change my diet. I want to go and have a good marriage, but I'm not willing to work on myself or improve my relationship with my spouse. You're not willing to do the work. So if you're willing to do the work, that's a great starting point. If you've already got the book, that's where you reach out to Rodrigo. Okay, reach out to Rod, say, hey, I want to schedule an appointment. I want to learn more about how to get started with my accounts. Now, lastly, I do want to check for any final questions. Avery says, how can we help get WDX in the public and private education systems? That is a mission of mine. That is a goal of mine, Avery. So that's going to take a lot of work, right? So we need to get really successful at the client and individual level. I think we're probably going to get into companies first, private corporations as employee education. And as that starts to really gain traction, we'll be able to then go to churches and schools and other institutions and say, hey, we've got proven curriculum, it works, it helps people. Now, the problem with that is as soon as we do that, we're going to get, a fight back from the banks in Wall Street, because right now that's what's in the schools. That's who's influencing that curriculum. So we need an army. That's why we're building our ambassadors. We need an army of people that represent what we do, right? Like they're willing to go to, the local private school in their area and say, hey, I represent Wealth Dynamics. I want to help teach, right? And they're not going to probably pay you for it. I want to just volunteer and I want to help teach and I want to make sure this information is in the hands of kids, because we should have learned this when we were in school, right? So Casey says that's a loaded question. That would be a lot of restructuring for sure. And there's people that are out there that are willing to help us do it. So if you're one of those people, reach out to us. We'd love the help on that. So guys, that's all I've got for today. I am going to tune out. I have to do a photo shoot, video shoot, and I've got a one-on-one call with an ambassador this afternoon. So guys, tune in again Wednesday night. I want to give you one more webinar. Okay, one more webinar we're doing Wednesday night. Wednesday night at 6:30 p.m. Eastern time. It's going to be with Hive Law. Okay, Hive Law is our legal planning firm. They do asset protection, estate planning, all of our legal work for clients that are building wealth. This is not I'm suing someone or I got injured and my neck hurts. It's not that kind of legal. It's I built up an asset portfolio. I need to protect it with the right LLC or corporate structure. Or I need to make sure that my estate doesn't go through probate. Or I need to make sure that I set up a Rockefeller endowment plan, like the exact same thing the Rockefellers use. Hive Law can help us set that up. I need to set up a charity. Like those are the kind of things Hive Law does. So we're doing an asset protection webinar. It's going to be on Wednesday night, 6:30 p.m. Okay, 6:30 p.m. Eastern time. I want to grab the link for you guys real quick so I can post this. And that's going to be here on Zoom. We will record it. We will repost it. So if you can't make it at 6:30, that's okay. We would still love for you to be there. Let me grab the link for you guys. Here it is. So if you go to the link, I'm going to drop it in the chat here really quick. If you go to this link, Andrew says Hive Law is great. I set my trust up through them. Yeah, that's awesome. Hive Law is the bomb. Yeah, there's the link. That's a Facebook redirect link. That's not such a great one. Let me pull this other one up instead. Okay, this is the link to register for the Hive Law webinar Wednesday night. It's going to be right here in the chat. Otherwise, guys, again, if Rodrigo sent you a message, check your chat. If you didn't get the book, go to jerryfetta.com/B2F promo. I want to thank you guys that stayed on longer today. We did go over, we had a ton of questions, but I kind of like that. So maybe we'll do that more again next week. So think of your questions. We'll see you Wednesday night. We'll see you again next Saturday, 1 p.m. Have a terrific weekend. Good Super Bowl. Happy Valentine's Day. All that stuff. And I'm tuning in and I'll talk to you guys later.